Hi, everyone. Good morning and welcome to our webinar, our Facebook Live. Um, I am Amanda Beren. Some of you might already know me. I know I've talked to a lot of the partners here, but I'm one of the senior account managers here at CorpNet. I want to thank all the existing partners who are joining the event. It's great to see everyone here and welcome anyone new. We always appreciate new partners and encourage you to sign up, which we can go over later on. This Facebook Live is about compliance and making sure that your clients stay up with certain things, specifically the annual meeting minutes. So this time of year, it's great to get caught up on various different compliance items for your clients or even in your own business. Take advantage of the slower season. I know there's no slower season for accountants anymore, but slower season by getting organized and making sure your clients are all in good standing. And as we approach Q3, just making sure that they've got everything taken care of so they're not cramming everything in towards the end of the year. So let's get started. I've got my screen shared. So what we're going to be getting into today is annual meeting minutes and just covering what they are, why they're needed, and all that good stuff. So let's start with business compliance, just basic business compliance. What is it? What is business compliance? Why is it important? So business compliance is important because to all businesses, mostly business entities, no matter the size. Corporate compliance is basically maintaining the good standing of a corporation or LLC in any state where the company is basically established. So you've got your corporation state, you've got the businesses that you're registered to do business in, domestic or foreign entities. Maintaining the corporation or LLC is an ongoing process. So this needs to be done on a yearly basis. Some states, not so much, but definitely good to at least take the time to make sure that they've got everything covered for the year. Also means, will you be continuing the business next year? Are you going to be adding anyone? Do we need to make any changes? So on top of the compliance and things like that, it's just kind of good to give an overall look as to what the business is doing. So business compliance is pretty much required to any business, except for sole proprietorships and partnerships. And I mean the structures, not the tax structure or the tax status. So single member LLCs, multi-member LLCs, this is all a requirement in most states. So compliance regulations vary by state. Some states have a filing that needs to be done every year. Some states it's every other year. Some states have no annual filing that needs to be done, and they just need to keep up and maintain other things internally or externally. For businesses that are operating in multiple states or thinking about expanding into other states, it's always important to look and assess at what your annual cost is going to be, what the maintenance is going to be for these types of states. For example, you've got annual fees and filing fees, which would essentially be like the annual report. Franchise taxes in some states, legal and court systems that you might have to go through if you venture into other states. Investors, state corporate income tax is also something to look at. So these types of things, if you have clients who are wanting to expand or open up new locations, or maybe they've hit a nexus in that state for, sales tax or just doing business in the state. These are just some things to make sure that they look at before they make those decisions. So consequences of non-compliance. So this is really common. A lot of business owners don't think that compliance is important because they don't think about it. What happens if a corporation or LLC falls out of good standing? So a lot can happen. If the business is still operating, It's basically the equivalent of you driving your car every day, but then letting your driver's license and registration expire. So it's important to maintain these things, even if business is slow. It's like, just get it done. Um, if they don't comply and they forget about it or they just don't do it, they could risk piercing the corporate veil. So basically, if that happens, there's no more liability protection, which essentially is like one of the main reasons why people do this in the first place. It pierces the veil and can go straight to the business owners, possibly the officers, directors. It's just best to keep the good standing of the company just for the overall liability protection. States could impose late fees and levy interest on payments that are owed. Some states have hefty fines. Florida, $400 late fee. Delaware, $200 late fee plus 1% for every month that it's late. So it's like these are additional costs that they're adding on to their regular maintenance of the business, especially if the business is slow or not really being used that much throughout the year. They're just adding these additional fees when it can be done before then and they won't have to accrue those additional costs. Um, it can poorly affect financing and business transactions. So a bank or lender won't even think about giving a business a loan or extending any type of credit limits if the business isn't in good standing. So the first thing that they do is they go to the Secretary of State, check the status, make sure that they're all up to date with their annual filings, and move on. But if you're thinking about getting a loan or applying for anything, then always keep your compliance up to date. Um, it can delay business expansion. So, for example, if you have clients that want to move into other states, maybe they're expanding, maybe they are hiring employees and opening up new locations or creating a nexus in those states, they can't do that if their business is not in good standing. The reason why is when a foreign qualification or when you file a certificate of authority, it has to have attached to it a certificate of good standing from their home state. So that is basically a document that says this company is all caught up with all their filings and the state won't issue that certificate unless the business is actually all caught up with all of their annual compliance. So that will delay the process of any type of uh, expansion for the business. Lastly, the state could dissolve the company. Some states do this immediately after you miss your date. Some states give you some grace and just have a late fee or some penalties. Either way, if the business is active, this is the last thing they want to happen. And some states, if they dissolve it, it's gone. You can't reinstate it. You have to just start fresh with a whole new entity. That's usually like multiple years of not doing it, but it's some states have that. As far as the different types of compliance, so there's a ton of different types of compliance, but specifically we'll talk about the two types of compliance, internal, external. So let's start with internal compliance. So internal requirements are basically done by the directors, officers, shareholders, members, managers, anyone kind of operating the company and have any type of stake within the company. Internal records have to be kept as part of the company records. And this is basically just all the documentation that the company has, the history of the company. If you're planning on selling the company or if you're ever in a lawsuit, all of this stuff will be asked to be presented, whether it's in court, whether it's to investors, but you have to have this stuff and it's good to just stay organized. Some examples of these things are federal tax ID number. This is the equivalent of a business's social security number. When you have a baby, one of the first things you do is get a social security number for that baby. Why not do it for your business entity? I know that for single member LLCs, it's not required. So this would basically just be an alternative to using their social security number. So it's definitely recommended. Open a business bank account. A lot of people don't realize the importance of opening up a separate bank account for the business. They just run everything through their personal. Everything personal and business should be separated. Everything. I'm talking bank accounts, assets, domain names, anything that a person has under their individual name, if they were already operating as a sole proprietor or partnership, once they turn business entity, just move everything over to the LLC or corporation. That way you just have total separation. You also have bylaws and minutes for the corporation, operating agreement and minutes for LLCs. These are done generally within the formation. So all of this stuff. So EIN, articles, operating agreement and minutes, bylaws and minutes, any of this stuff, this is usually done at the inception of the business, the business entity. Also, corporate resolutions. So corporate resolutions are good for certain things. For example, opening a bank account, electing officers, directors, even if it's just a single person. Basically, what these are is they are documenting these little things for you. What day did you open the bank account? Did you purchase any property? Document it. A resolution is just a 1 to 2 page document stating that you're documenting certain things and adding it to your meeting minutes, whether it's initial or annual. So yeah, so that's for the most part the gist of all of the internal. Of course, there's other things like, tax registrations and things like that, but we'll get to that. You have external compliance requirements. So external compliance requirements are pretty much anything done with the state. So what's your external compliance? When you're forming a business, articles of formation, articles of incorporation, you have to designate a registered agent. If you have a person or you want to act as your own registered agent, fine, you can do that. It's not recommended, but absolutely has to be designated when the business is being formed. Payroll tax, if you're going to have employees or if you're putting yourself on payroll, if you're an S corporation or C corporation. Sales tax, if you need to collect and pay sales tax, that registration needs to get done. These are all separate filings. If you're doing business under a different name other than the business entity name. Certificate of good standing, if you need that to expand into other states, that's an external compliance. Those are issued through the home state of the business. You've got foreign qualification, apostille certifications, amendments for any changes, conversions, reinstatements, initial and annual reports with the filing, or I'm sorry, with the state, franchise tax filings, dissolution if they're going to close the business. These are all things that should be discussed with your clients towards the end of the year, because once you roll into a new tax year, they're going to get hit with any type of new 2026 compliance requirements and taxes. Business licenses, annual meeting minutes. So let's get into the meeting minutes. So all corporations in the US have to hold an annual meeting. That meeting could also be called an annual shareholders meeting, an annual stockholder meeting, annual general meeting, whatever they want to call it. But most corporations hold this meeting after the company's fiscal year end. So let's just say December 31st. A lot of times it's done by March 15th. This way it's fresh in their mind. They can document anything that happened for the previous year and plans that they have that they want to put on the agenda for the upcoming year. During this meeting, the corporate secretary takes detailed notes, including things like date and time of location, who attended, who was absent, the agenda items with a brief description of what it is that they're discussing. If there's no agenda, your agenda is basically that you're having this meeting for the purpose of compliance, and that's it. If there's been no changes, I mean, it's still an agenda. You're still doing it. Details about what was discussed, results of any voting actions, if there's somebody that you want to elect or remove, things like that. And then time the meeting was adjourned. So there's usually 2 meetings that happen, one for the directors and one for the shareholders. If all people hold all positions, then you can kind of kill 2 birds with 1 stone and combine the meetings. If there's directors that are not shareholders, there can be 2 separate meetings. However you want to do it, it's important to document. Any and all discussions during these meetings has to get documented. This is important for, future discussions. If you ever have to go to court, you have it documented, everybody signs it, and that's it, it's done. So here's an example of meeting minutes. So this is what they generally look like. This is the legal format. There is no required format of these meetings. I've heard of people writing things down on a Starbucks napkin. It's there's no official required format. Um, but this helps to keep things organized. If you're ever asked to present the meeting minutes in court, having a structured format looks better. So when you have CorpNet do your annual meeting minutes for your clients, we structure them in this format with all the information that the client gives. The clients can use the minutes we prepare before the meeting. Usually, when we prepare them, the meeting's already been done, and we're just basically inputting the information that was taken during the notes of the meeting and putting them into this format. But another option would be, which we also do, is just preparing the meeting minutes and then adding the basic information, the company name, the state, the date, the address, who attended, and then the clients can kind of fill in the blanks based on what happens at the meeting if they do it beforehand. What should you do with your meeting minutes after it's done? So basically, um, you just have to keep it with the rest of your documentation. So after all the documents have been signed and executed by the shareholders, by the directors, by whoever attended the meeting, the secretary goes through, make sure everybody's signed it. You just keep all of this stuff with your corporate records. Businesses should keep these records for at least 7 years. That's kind of the standard as far as if you have to go to court. They will want to see at least 7 years of meeting minutes. Um, there's no requirement to file these meeting minutes with a state office. So, for example, this isn't a filing that needs to get done. This is an internal document that you just keep in your place of business. There's no requirement to file it with any type of government agency. You can, we've done it before, but it's a little unnecessary unless you're required to do it. And then there's no requirement to have the documents notarized, but you definitely can if that's what you choose. If there's certain things, major conversations, major decisions, voting that happens, um, maybe it is good to get it notarized just for to have that official stamp and seal. Um, As far as resources for a partner, so we have a ton of resources for you um, as a partner or as a consumer, as a regular business owner. So on the website, we have a business name search tool. We have an interactive business structured wizard. So if your client doesn't know what type of entity they want to form, you don't know, you can go through the wizard, ask them specific questions, and then it'll just spit the answer out at the end of the tool or the end of the questionnaire. Um, we have your corporate partner portal, your corporate compliance, all of the monitoring systems, and proactive alerts. So we start notifying you about 90 days prior to these due dates. I highly, highly, highly suggest using this for your clients. It keeps everything organized for you. It gives you the different due dates for all the different states, which they're different in every state and per entity. And let's be honest, your clients are going to just assume that you're already doing this for them anyway, because they just assume the accountant is taking care of everything for them, right? So you may as well just start offering this as an additional service. Annual meeting minute services. This is also an alert that we remind you about. We just started sending out these alerts probably within the last month, and it's been a huge help to a lot of partners or business owners that have a lot of businesses of their own. And then we've got business guides and checklists that you can download. We have them white labeled for reseller partners. And then the blog. The blog is a great resource as well. All of this stuff is on the partner page of our website. And lastly, you have an account manager. Each partner has a designated account manager. Let them help you through these things. Use them as your ultimate resource. That's what we're here for. If you're not sure, you don't have the time to dig into it and look at it, call your account manager. Email your account manager, have them look into this stuff. But this is why you have an account manager to kind of help you through these things because you're not an expert in every state. Maybe you just need to chat and kind of brainstorm with your account manager. But um, yeah, so If you haven't already signed up for the partner program, you can do that on our website or give us a call. We can walk you through the perks, walk you through the process, the different types of partner programs we have, whether you want to just do referral or a white label. Um, and this is a great addition to the services that you already offer. Compliance goes hand in hand with it all. Uh, Taxes is another form of corporate compliance, right? So if they're not in good standing with the state, it might affect their state taxes. So it's a great service for accountants to kind of get into for their clients. But yeah, so we will go to questions if anybody has any questions. So first question I have is, how can CorpNet help me streamline meeting minutes for my clients? So basically, we have an alert that goes out to you in your partner portal to remind you of all this. And if you don't already have that client's business in your portal, you can add the business. And then once you add the business to your portal, we just start sending you alerts for anything that they have due based on the state, entity type, when they were formed. We also draft the documents up. So literally all you have to do is just give it to your client. We just need some basic information to get started. Let's see here. What if my client is a solo entrepreneur? What if they're a single owner? How do they take minutes? So it's pretty simple. As silly as it sounds, they just have a meeting with themselves and they just document everything that they had the previous year and everything that they have coming up, and it was done, and it's the compliance is done. It's like I said, the agenda is the meeting if there is no agenda. Do we need to get the minutes notarized? So no. So a notary is not required. So you can, if you want. I've definitely seen it before, especially if there's some major things that are discussed. Um, totally up to you, not required. So if you want to get them notarized, you can. If not, you don't file these anywhere. So this is completely up to you. Let's see here. When is the best time of year to remind clients? So usually around the end of the year to the beginning of the year, just reminding them to get done for either the next coming year or the current year. We usually suggest beginning of the year. So March 15th is usually like your standard quo for meeting dates. Let's see here. Okay. How can CorpNet, oh, I already went through that question. Do you offer resources and information on 501c3 nonprofits? Absolutely. Yes, we do the actual nonprofit formation for the corporation. We do the 501c3 tax exemption, whether it's short form, long form, and then we can do meeting minutes annually for the nonprofit. The initial bylaws and minutes is a little bit complicated for nonprofits, but you can definitely discuss that with your account manager. If you're not a current partner, just give us a call. You can talk to me, you can talk to any of our sales reps. They'd be happy to help you out with that. Let's see here. How many years should we keep minutes? Okay. 7 years is like the average recommendation. But if you have clients that have never done this, then we can do past years too. I mean, we've done 25 years of meeting minutes for somebody who's never done it. So it's usually recommended to keep all of the documentation for about 7 years. But if you have somebody who's never done this and they just want to get up to date, we can absolutely do multi-years. If they have the specific information, great. If not, we just put the different years and everybody signs it and they're good to go. Okay. Any other questions? It looks like that is it. So thank you everybody for joining today. A copy of these slides and this whole deck will be up on the Facebook Live and LinkedIn, so you can download it and use that as a resource. If you have any questions, you can give us a call at our toll-free, which is just 888-449-2638. You can ask to speak to a partner program account manager, or any of our sales reps or account managers can help you with all of this stuff. We have another live in September that will be done on reinstatements. So Angelina will be hosting that. I'm sure some of you are familiar with Angelina. But yeah, if you have any questions or ideas on specific lives or webinars that you want us to do, just message us on Facebook or LinkedIn, and we'll definitely throw something together. Or if we already have it, we can send it to you. So, but yeah, it was great seeing you. Stay tuned and enjoy the rest of your summer, and hope to see you all soon.